Bitcoin has been trading sideways recently, and with this comes massive opportunity. In this video, I'm going to jump down into both Elliott wave theory and smart money concepts and review the most recent price action and what I think is likely to happen next. Let's start things off by jumping down into our Elliott wave structures, because things did change a little bit following on from yesterday, right? So yesterday we were talking about get ready for bigger moves that are going to occur, that kind of thing, and we can see that we have deviated away from this ever so slightly. So let's go ahead and jump down into the Elliott wave theory side of things, and then we'll review the smart money concepts, right? So here we can see that we were talking about basically being in a ranging market between 27,805 and 28,236. Now we wicked down low. Our expectation was to come down into our little yellow box area here, but these wicks actually proceeded to come down a little bit lower than this C wave structure over on the left hand side. So what I'm going to do is I'm going to grab hold of that C wave there. We're going to move it over to here, and we can see how that kind of plays out. Now, we want to kind of check. We do have the ability to still to think of this thing as diagonal. And yeah, I think we're still technically there. Let me just check a couple of things, right? So we have this line just here. This is the low before we pushed up into there. We have this fourth wave, okay, or theoretical fourth wave. This has a high of 28,308, and our low was 28,312. So I still think that's actually in play. It looks like it would have invalidated or should have invalidated. I think at some point that wick was higher. But if I go ahead and remove this and remove this, we can now review what that might mean, because if we measure the distance from this low here to this high here, this move coming down meets our requirements from 1 to 1.236. Or actually, no, it'll be, yeah, it's not quite where it needs to be actually looking at it. So we'd have to just check to see whether that's a diagonal that just truncated, which is possible it could. So we'll check that out, because it is possible that this whole thing is a diagonal structure. It doesn't mean that we're not going to have the high, because I do think the next push is to the upside. So let's go ahead and review this little area down here. And what we're going to do is we're going to jump into the 15 minutes for this, because I think the 15-minute chart is going to help us understand that structure just a little bit easier. So let's see, we kind of have a move here that looks like it's 3 coming down, 3 going up. We then have 3 coming down here, although it looks like it wants to mirror that of a 5-wave structure, but it's 3. And then we have 3 going up, and again, we have overlap in here. We'll call it 3 going down. I think ultimately we can argue that that is in fact diagonal, and it just truncates a little bit shorter than the 1.236 to the 1.618 expectations of that 5th wave movement. And I'll be quite happy to kind of look at that as a 5-wave structure, because we do have that over this side. We have a 5-wave coming down here. So yeah, I think that actually fits quite well. So let's go ahead and run with the premise that this is in fact 5 coming down here. So let's go ahead and clear this out. And what we'll do is we'll take this, move that, and I will go through that down there. Okay, that means that I can take this and I'm going to put this on the swing high. This basically now allows us to look at the structure like this. It goes 1, 2, 3, 4 and 5 like that. This is something that we actually had drawn up a little while back, probably about 4 days or so ago, and we were looking at this wave 4 as potentially overlapping with our wave 1, but it doesn't. It falls short by about $4, so that's still valid. So we're going to run with that. Allows us to come down here. If not this, you'd have to look at that as a WXYXZ, but I don't think that's a great fit for that one. Possible still though, nonetheless. This means that we moved up, and I still think we've got more room to grow. Okay, so I'm looking at this thing and I'm thinking to myself, we've got to be thinking about at least 50 to 88.2%. Which would be a pretty decent level for Bitcoin to kind of retrace into. Let's go ahead and remove that. Actually, before I do that, it's 28,237 to 28,647. Okay, that's the kind of the range. I'd look at this thing as a big 3-wave structure like this, taking us up into that range, and then at some point from there, we should get another 5 waves coming down, okay, coming down lower than the 27,711. That will allow us then to kind of complete a zigzag pattern. And, I'm looking at this low down here at 27,200, and it's looking pretty strong at the moment. So it'll be interesting to kind of see how that plays out. So that's kind of the expectation here. Let's go ahead and see where our actual B wave movement could go by the looks of the current structure. So we are oversold on the daily, oversold on the 8-hour, oversold on the 4-hour, and oversold on the hour. hourly, but the hourly still has a little bit of progression to it. So we're almost there. Let's go ahead and just check if we've met our expectations on this recent retracement just to here, and we're almost there. 27,820 would be better, but we have finding ourselves in a lot of demand right now. So I expect a small push to the downside. I'm not expecting it to go down lower than 27,750. Again, I think that's just going to wick down, liquidate people before going long, which brings me to if I were to trade. Now, if I were to trade and I was to go long on this, I've got a couple of different options. I can wait for this price to come down. I'm thinking there's a strong area right around here at 27,900. So I'd probably just go in at like 27,902. I'd put, that's the short position. Let's go for a long position. I would be about, let's just say somewhere around here. I'd put my stop loss down here below our swing low of our fifth wave. That's below 27,711. And then I'll be putting my take profit up here into this yellow box range. Okay, and that was, just for clarity, guys, up here in the 28,237 to 28,647. Now, if I were to go and target the lower end of that box, we're talking about a risk-reward ratio of 1.64. So it's still okay, pretty good. I like things above 1.5, but I want to get as close as we can to 3.0, and that would be on the higher side of the box if I were to enter right away. Okay, and you can kind of see that right in there. It gives you a good risk-reward ratio. Now, if we were to kind of think about this area as our low, then we're to test this area, for example, just a fraction lower, then we are going to struggle to push up into those higher ranges. Okay, so just bear that in mind. We will probably be on the lower side of that yellow box range, but ultimately that's kind of how I would approach the shorting and longing of the market here. I think we're about to see reversal and we're about to push up higher for Bitcoin, considering our oversold status. Now, the problem that we have is we are approaching the weekend. Weekend volumes drop down. Retail investors are pretty much the only ones really participating. So you can then start to see a little bit of a slow grind. That does mean that it will struggle to kind of push upwards, like the same way as we would struggle to push down or pull backwards. So I think ultimately big resets are going to occur over the weekend, where everything that you're seeing right now is oversold. Come Monday, I think everything's going to be overbought. So if we are to go long on the market here, it's going to be risky. So it's one of those, do what you do. I personally probably would not be trading over the weekend. I'd much rather wait for this next move, which I think will happen next week, where we'll see a big 5-wave drop to the downside, and I'll short that instead. So from an Elliott wave theory point of view, things are looking interesting. I still expect further downside here. Lots of demand in this range, but I would expect us to just pull back just a fraction more before we actually start moving up. And if we move up today, then we could actually see a slow weekend grinding sideways, which actually might take us from an overbought to oversold again, and so forth. So interesting developments over this Friday and what that might mean for BTC. Let's jump over into the smart money concept side of things, right? So from smart money concepts, where are we? Well, we're below the 50 and 200 EMA. We're about to see a death cross on those 50 and 200 EMA lines on the hourly. It's minor. It doesn't really matter terribly too much. At the moment, we still have a weak high, strong low. So it's still indicating to us that we are in a slightly bullish territory. However, I am concerned that that's not going to last very long. We can see all these red areas here. These are all internal sell order blocks, and all the green areas are the buy order blocks. And what we can argue here is there's more in the way of selling, and specifically the ranges of selling versus the ranges of buying. It does look like we have to push upwards, but I don't expect it to kind of stay up there and break past the weak high. My expectations are aligned to Elliott wave theory here, where we can see some kind of big correction coming in and taking us down lower like so. Okay, but expect the next move to be up, in my opinion. And then a big reset. At the moment, we're fighting equilibrium. We're fighting those EMAs, but I do think we are likely to break through those real soon, and then everything will start turning green in the market for today, etc. So smart money concepts here is looking bearish with our small minor movements to bearish. I expect us to break upwards and have a change of character. It'll be interesting to kind of see how that plays out. There's no institutional candles here recently. Obviously, we've still got these ones much lower in the price chart, which of of course, I do expect us to come back and fill at some point. But for now, I think we're not quite ready for that. I think we're getting there, but give it some time, and I think we'll actually start seeing that pullback. But for now, I still think there's more room to the upside on these smaller timeframes than there is to the downside on these timeframes. So that's kind of one thing to be keeping a close eye on. Now, if we take a look at our kind of bigger macro piece, we can still see that we're consolidating down in the supply zone. We are yet to get rejected from this. This is basically telling me this is not really a supply zone, but we are testing that upper trend line, and I do think that's going to continue to be tested at least one more time as we kind of push towards 30k, and then I think that's really where the hammer comes down and really pushes Bitcoin into the lower trend line. Whether or not we lose that is going to be interesting to see. But testing around the $22,000 to $23,000, I think, is something that has to happen at some point, and that does tie in with where our fair value gaps are from a smart money concepts point of view, and it also ties into our bigger structure of what is going on with Elliott wave theory. All of this is just a big ranging market at the moment, and I don't think it's not going to take terribly too much before we actually start to see a bigger pull to the downside overall. Now, for those who are questioning or thinking about the stochastic RSIs, this one here, we are using the 𝗕𝗪𝗪𝗔𝗡𝗪 method, so you can see how we are oversold on these when we do that. That's basically using the average position of every candle, whereas I come over to the smart money concept settings, this is on the close position, and the close position is just basically every close position of every candle, and these give you different points of view on your stochastic RSI. Personally, I think using an 𝗕𝗪𝗪𝗪𝗪 method, which I think is what they actually call it, yeah, 𝗕𝗪𝗪𝗪, sorry, 4, which is basically that average position. It's the open, the high, the low, and the close divided by 4. Gives you the average price of the candle, and then if you use that as your stochastic, then you end up in a kind of better position, in my opinion. That's a better way of approaching it. But I do have both on here so that I can cross-reference. We can see the 8 hour on the closed positions is not quite there, but it's very, very close, whereas on an average position, it's already there. Okay, so this allows us to kind of flick through and understand exactly what is going on with that. Now, this particular indicator is available to our Patreon members down in our Discord server, so if you haven't already gone down to the Discord server or are not yet a member, check it out, linked in the description below. And actually, on that note, guys, if you did find any of this useful and informative, smash that like button. Really do appreciate that. If you're new to the channel, why not subscribe? You can always unsubscribe later. As I said, join us down in Discord, guys. It is a central hub of everything that we do. It's the first place that we go to notify you of everything that's going on in the crypto space. Linked in the description below. I don't think you'll regret it. I'm going to wrap this video up right there, though, guys. Lots of things to be thinking about this weekend for Bitcoin. I think we should have a pretty big day today, so it'll be interesting to kind of see how that plays out as well. Let me know what your thoughts are on BTC in the comments down below, and I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.